Hey guys, Sam back with you here Tuesday, August 21st, kind of middle of the day here. And as I mentioned, I'd be back with a look at gold. Now, so I've got, this is the XAU USD. So I'm looking at the gold dollar spread on this. I'm using the forex.com feed. Now, this is a fairly good example of why, particularly when you're looking at when you're looking at something where you've got this much history here, it's really a good idea to try and get a handle on the longer term count so you get some sense of where you are in this trend. This is a difficult count. There's no question about it here. So I'm using the 3-day, which I prefer to the weekly. So now, one thing that might make this a little bit easier, since we have so much data, is to go into log scale. It compresses. We get compression of the upper numbers here, and we get more expansion down here, so we can see the separation of the waves a bit easier. Now, it does distort it to your eye, right? So if I take that off, you see the distortion here as we compress what's lower. But as we're trying to get a handle on the count from the low here, and I'm going all the way back to the 99 low, it can be helpful. So just something to keep in mind as an option for you. So let me open this up. So all I've done here is I've wicked off the lowest low that I possibly can here. We do just barely, all right, if I blow that up, we do just barely stay internal on this retracement. So it's close, right? You see here, we spare it by a few ticks, so about as close as it can get. Well, it looks like I get an ABC. We come down here and we do not violate that low, so it's a candidate for a 2. So if we allow for that, then working our way up, well, we need an impulsive structure to get us our 3. Here's the deepest retracement. So we get this little ABC right. Isn't that just absolutely amazing? Here on the 3-day, we get just a toe right into the lips of the Vegas wave, and then we rip up. So yes, I checked this. So just to confirm here from this low, if I take the length of the 1 wave projected from the 2, you can see it just barely get longer than the 1. Just gets a few ticks. Well, it's a 3-day chart. That could be more substantial, but we certainly get longer. So we get through the 100. So we have a contender here for a wave 3. And it looks like I go 1, 2. Do we overlap there? Do we? Whew, that's close. So it looks like we go 1, 2, 3, 4, 5 into the 3rd. That's what it looks like to me. So let's just double check it here. So if this is, so this actually could be, so if this is our 1 here, this is going to be really, well, that's not going to work, right? So that can't be that. So it's got to be here, right? So it's got to be this way. So it's got to be 1, 2. So we have to have it this way. So we have to have A, B, C coming down here for our 2, which actually, given that we're on a 3-day, that actually works better. So we get a truncation in the C. So we get the push down here for the A wave, right? So here's our 1 wave high. Now let's wick that off. Okay. So from that we come down, we go A, B, C into a 2. All right. So upon getting this 2 here, now we need to get an impulsive structure. So we go 1, 2. 3, A, B, C into the 4. We're spared of the 1 here, of violating that 1. So to put a count on it, you'd get 1, 2, 3, 4, 5 into our 3rd. All right, let's get that up there. All right, so that plays. So 1, 2, A, B, C into my 2 down here. From that 2, from this 2 low, I should probably go up a degree there so you can see it better. Let's go, we'll go to micro. All right, so from that, then I go 1, 2, 3, A, B, C down into the 4. We don't overlap. We get the push up for 5. So I've got, and you can see here, now we can see it a little bit better, the break of the 100. So my 3rd, and then it looks like I get the same thing here. So it looks like this is my A wave, B wave, right? In strong trends, you'll see these little triangle patterns here, particularly in the 4th, you'll often see that. So let's pull that back out and try and reassemble. Okay, so if I take the length of the, let's push this back now. So there's my 2 now right here. Right, so here we go 1, 2. Remember we had the A, B, and then we had the shallow 2 wave here. And then here's our 1 wave of the impulsive 3rd. Let me bring that up so you can see it a little bit better. So in green, 1, 2 down here. 3, 4, 5. So that relates to the 1 here. So let me pull this off here so you can see it better. Okay, so this would be 1, 2. Here's my 3. Well, let's think about that. So this is probably going to be beyond anything we could measure here. So yeah, so taking that out. So if this is the 3 here off of this 1, 2, well, here's the 2, 6, 1, 8. So we're probably in the 5, 6, 1, 8, 6, 6, 1, 8. Let's just see here if I put a 5, 6, 1, 8, yeah, that gets it. Okay, so we go 1, 2. We got to go all the way to the 5.61 or 561.8 to get our third up here. So I've got a candidate for a third here. Now remember, we're in log scale, so it looks a little bit different. When I take it out of log scale, 1, 2, 3, 4 looks a little easier to read. But the separation, I think, helps us here as we work through the count on the longer degree. Okay, so that I've got a candidate here in white in the micro. So 1, 2, 3, A, B, C into my 4, up for my 5. Now here's the deepest retracement that I have throughout this entire move off of this, essentially this double bottom low here, although we're spared the new low, so we do have a contender for a 2. So if I take it from this well, let's see. If I take it from the 2, let's look here. So from the 2 to the 3, so here's the 38. Looks like we're back down to the Vegas wave, and then we go. So you can see what happens here. So you can see we go from this. We get here's the first reaction at the first algo target, second reaction. So they get second target, and then look at the reaction. All right? So that looks like a good candidate here for a 1 wave. All right, so I've got a completed 5-wave structure. Then this is the deepest retracement that I've seen throughout. So if I pull up here, now this is going to require us to accommodate a more shallow 2 wave. So I get that right on that absolute low. Okay, so here's the candidate for a 2. Well, we're a little shy. So I've shown this enough times now. We know it's not that unusual. High probability zone for a 2 is between the 50 and the 618. We don't quite make it. So we get some sort of an A, B, C. We push down here. Now that could be, remember I'm on a 3-day here. If we took this down, it looks like there might be something here. Yeah, possibly. Okay, so you can see it here. Swing high to swing low into the golden zone, possibly. That's just a front run on target. Looks like we ran into a little shelf of support down here where we had these prior pivots here. So prior resistance now kicks in for support. That gives us a candidate for a 2, right? So at this point, it's just a candidate. Does that work if we're going to push up here into a 3? Well, let's check it. So that's going to play here. So we go 1, 2. Well, it looks like I can get a 1, 2, 3. Well, it's 3, 4. Let's just measure it. Okay, so it looks like I've got 1, 2, 3, 4 extension in the 5th. All right, well, of course, first thing we've got to check is 3 the longest, or pardon me, we got to be sure that 3 is not the shortest. All right, so there, okay, so we get through 100% the length of the 1. So this is a candidate for our third. Right, here's the high probability zone, so here's the other alternate. So that's possible, right? But I don't like the retracement's not as deep, so I think this is a better fit. So I think we've got a 3 here, 1, 2, 3, ABC into the 4, and then we go 1, 2, looks like 3, 4, 5. Do we get a diagonal? Nope, we get an impulse to finish it. All right, so we've got a candidate here. Looks like I go 1, 2, 3, 4, 5, so to label that up. So it looks like I go 1, 2, 3, 4, 5. Now I know that you can't see that, so bear with me a second. Okay, so that looks reasonable. So the count seems to be playing fairly well here. Now remember, I'm on a 3-day chart. All right, so we're coming in here. 1, 2, looks like 3, 4, up we go for a 5 of the, so I get the 5th. Let's bring this down here. All right, so I get the 5th of the 5th of the 5th of the 3rd. All right, let's get this one up. Ah, damn it. Come here. All right, there we go. So 1, 2, 3. All right, now here's where it gets difficult. Okay, so let's look at a couple of things. So can we put the whole thing together as a candidate here for this? Now let's see, I lost my. So I have 1, 2 right here. So this let's wick off this 2 low because this will be important. All right, so all of this plays. Now we can pull some of this off. We don't need these anymore. Okay, 1, 2, 3, 4, 5 into 1. 1, 2. Okay, let's think about that. Well, if this is a 3 and I've come down here, I'm putting in some sort of a technical pivot, excuse me, we're going to pull from the 2 low. Well, remember, I'm in log scale, so it's going to look a little different. So if I take it out, maybe that'll help you. Okay, so here's my 2. Here's my proposed 3. Come here. Now I lose all this when I move out of, sorry guys, hang on. All right, so I thought it would be easier on your eye if I take it out of log scale. Okay, so now let's check it. So if I go from my wave 2 low here up to my wave 3, what do I get? All right, well, I've broken here. I've broken through the 65. Now, note, we have not overlapped the wave 1. Well, look, we're spared by a few, well, again, this is a 3-day chart, so that's bigger than it looks. So we're spared by that low. All right, so it's a candidate. So it makes me lean into this count as a candidate for a 4th. So because we don't overlap the 1. So potentially now, well, here's where it gets very difficult. Now we're going to get there. So I know what matters is the hard right edge, but we got to put it in the context of where we are in the larger degree count so that we don't get on the wrong side of it. So if this is, so we are still potentially now, we'd have wave 5 up here. I should probably raise that degree. Let's go to something that's unmistakable. Okay. So there we'd have 1, 2, 3, possibly we've got the 4. Now, one thought is the 4 is in over here, and this is some sort of a diagonal that's getting started. I'll show you why I don't think that's the case. And I think, so the second we overlap this wave 1, now if we're going to continue to move higher, of course, that means we've got a diagonal structure. So as we break this down here, my view is that there's still new lows to come here. So I think this low is, or this wave 1 high, let me say it that way. That wave 1 high is in jeopardy, thus converting the entire thing to a diagonal. Now let me show you why I think that way. All right, so let's go. We'll go down to the daily. All right, so I know this is going back. What is that going back to? 2012. Is that right? 2011. I understand. I know it's a lot of time. So what does this have to do with where we are now? Well, I'm going to get there. Okay, so if that's a 3. It looks to me like we are in the midst of a WXYXZ, right? Now I come to that conclusion reluctantly because I don't like to overcomplicate it, but there's very difficult to get a count that doesn't support new lows here based on what's happened from this range that we hit up here. So you can see here we had this area here where we just had stiff resistance, just couldn't get through. So what is that? 1350, tried it once, tried it again, rejected, tried it again, rejected, again, rejected. Now we're having a pretty substantial move off of that. So I see this as a wave coming down. Now that's a big rip here on a daily. We're going from, well, that's the all-time high, 1920, we'll call it, down to 1529. That's a big rip, right? I know it distorts it a little bit here when we're looking at the daily, and we're all used to looking at the 60-minute. But if we come down here, it looks like I go A, B, C, gives me my 3-wave correction to that. And as I recall, this was technical. So Algo is going to use, well, let's see. If we go to A, that's kind of interesting. So if we go to the A low, all right, we get a break here on the A down for this pivot here. Then we go right into the golden zone and ultimately get 3rd target down here. So this is a little tricky here. But as relates to a B wave, well, we know a B wave can be anywhere from the 50 to 786. So it's not out of the norms here, and the fact that we essentially we triple top here. So note here, we've got this range here that it's stiff resistance, not going to get through 1795, and then we do the same thing here. Multiple times resistance gets tested in gold and then just can't get through. So what I think we have here is our first ABC completing, right? Remember, this is this zone up here. These are big moves, right? So that's, what are we here? That's 1787 coming down to 1525. That's much bigger than it appears here as we look at a daily chart. That's a fairly big move. So I think we get an A, B, C into a B, down into a C. That's our W, right? Remember, W, X is correcting that first ABC. Well, this is right in that zone here. We know we want to see an X wave anywhere from the 786 to the 887. That's the idea. Well, we don't get there. What we run into is the golden zone, and we can't get through it. Now, again, purists, I know we want to see an X wave, 786, 887 would be perfect, but we just don't have it. I don't see another way to count this. So if I come off of that, if I allow for that as a WX, Well, coming straight down here, I can definitely get a 5-wave structure into my A wave. So here's just straight rip down. You can see here's the 3, the 4, and the 5. So it looks like we go 1, 2, 3, 4, 5 into my A wave. Here's the A, B, C into my B. Then here's where I lean into this count more fully because of this 5-wave structure, and it's also technical. So this is finishing something. So from this pivot, I go 1, 2, 3, 4, 5. So I've got an ending diagonal here, and it's technical. So as I've showed you many times, in a diagonal, we want to look for a relationship between the start of the 1 wave, the pivot low of the 3rd wave, right on there. And you can see what happens here, right? So we come right just shy of the 618. They rip it down, algo target, right? So look at the reaction. So we know that's an algo play. That's the tell. So there's our 3, 4, 5 to finish. So as Elliott traders, we're looking at this going, that's an ending diagonal. So that's finishing something. So I have to work my way backwards. From this 5-wave structure, well, where does it start? Well, here's the start of it. Well, what does that look like? That sure looks like A, B, C, finishing. So that gives me my Y wave. So I've gone A, B, C, W, X, A, B, C, Y. Well, here it looks like yet again I go A, B, C because this does not look. I can't get anything. I can't get a motive wave out of it. So if this were going to be starting, if this A wave was finishing the correction, we'd be going 1, 2, 3, and it's not happening. So this looks much more like a 3-wave corrective move. And I've been through this with on prior videos here. There's a lot of technical trading in here. So as we move from the daily here, as we get down here, now I'm getting there. So I just want to give you this context here. So this looks like this X wave is in. So we're correcting. So from the from the Y low, we get a 3-wave counter trend correction into an X wave. So down here, we're looking for the Z. Now here, take note. This 4th is in play is an issue because if we take out that wave 1 high, well then now we're looking at a diagonal and the symmetry gets very, very difficult to accommodate given the length of time. So look what we'd have here. So look at the length of the 2 relative to what would be the 4, right? Just doesn't fly. It doesn't look good. So that's why I'm starting to, kind of question this. The whole count looks problematic. So this looks to me like it's got more to go. So let's consider that. Is there a possibility that this finishes down here and this 4-wave holds, or we hold this low, and then we're going to go back up here? Well, let's see. So let's go from the daily. Let's go to the 3-hour here and work off of this X wave high. All right, so here's that range that I was talking about. So I'm using this absolute pivot here. So this is, you can see there's some sort of a diagonal finishes this. 3, 4, 5. I know that degree is way too high. All right, so we don't want minuscule. Let's go to submicro work. Okay, so you can see I'm finishing something here. All right, and I think this was technical as well. So I think we have a failed target here into that double top. So from this pivot here, so we come right to the 50. We finish with this diagonal, but we have an unrealized target up there, right? So target here does not get met. Well, essentially we triple top, but here certainly we double top into this C wave here. So I have it as an ABC coming to finish that. So if this is my pivot, so let's wick that off. This is my pivot that I'm working from coming down. All right. Coming down here now, now I'm in a 3-hour. So I can go 1, 2, 3, 4, 5. All right, I can't ignore that. So either an A wave or a 1 wave. Now I've got a C wave going in here of an X wave. I'm looking for all of this to complete down here, all of these numbers. So here's what I'm looking for. Here's my target down here. Here's my, reluctantly, I'm allowing for that as a 4 because I don't like that symmetry, but let's see if we can make it make sense. So I can't ignore that 1 wave. All right, or pardon me, that 5-wave sequence. So I've got a perfect impulsive structure coming off of that high. All right, let's go with 1. Then I get an A, B, C into my 2. Now granted, right, it's shallow. We're seeing a lot of these. We're seeing a shallow 2nd wave. Doesn't even make the 38. Very low percentage. We're in the 10% or less for a wave 2 to be that shallow, yet how else are you going to count that, right? There's just no other way to count that. That's a clear 5 down. That's a clear 3-wave corrective move, and it just is shallow. Right? Very weak market, so down we go. All right, we can allow for it. It's 10%, right? So certainly it happens. All right, well, let's think about. Excuse me. I'm so sorry. Excuse me. Let me think about where that's going. All right, well, if that's 1, 2, well, let's measure. So if I take this, length of this 1, and I project it from my shallow 2, well, minimum requirements here. So this can't be the 3 because we don't make 100% the length of the 1. We don't have, but look down here. So here we've gone potentially now, as we would be looking for a high probability zone, we'd be looking for, come here, we'd be looking for our wave 3 right here. Right, as relates to the length of the 1 projected from the proposed 2. Here's the highest probability zone. But I've got other variables in here as well, so let's think about that. So if this were 1, 2, if I were to put the 3 here, if that were the 3 here, I've got to get an impulse coming off of this 2. Well, I don't have it. So look what happens here. I get a straight rip down. Well, let's open this up. Let me go to the hourly so you can see it better. All right, there we go. So here's my 1. Here's my 2, straight rip down here. So that certainly looks like that's more than likely that's a 1 wave because I'm not at 100%. I can't call it the 3. Here's the first retracement. So I get yet another shallow retracement. Right? So it's often what will happen is when you see it once, you'll see it again. So here it is. So this was just barely, didn't make the 38. Here we're just getting to the 38, but I've got a clean 3-wave structure. So I'm going to play that again because I know there's a tendency for these to repeat. So shallow 2. So yet again. So here, 1, shallow 2. Can't be the 3, so that leaves 1, 2 yet again. So now I'm in the subdivision of my 3rd wave. Right, so the 3rd wave in white here. So 1, 2 can't be the 3, so that leaves 1, 2. Well, then yet again, so look what happens. This can't be the, so I can't go 1, 2, 3 because I don't have the length there. So measuring yet again. So if I take the length of the 1, right on there, there's my 2. Right, this not even close to 100%. Can't be the 3. So I've run into this twice. So I get 1, 2, 1, 2, 1, 2. Right? No way around it. Can't be the 3. What does that leave? Well, it can only leave the 5. So I've got 1, 2, 1, 2, 1, 2. Now I'm getting somewhere we're starting to make sense. So let me pull that off. So if this is my 1 wave and this is my 2 wave, well, I don't make the 618. But at least I make the 272 and I get actually through. So I'm in kind of a no man's land here between the 1272 square root of 1618 and 1618. I'm kind of in between, which implies to me that we're not yet done. So all of this I think is still moving lower. So given, not that we're going to make it fundamentally based, but given what's happening with the dollar and interest rates, this certainly would make sense if you try and think about what interest rates movement in the dollar and how that will affect gold. This certainly implies that we could be just more lows still to come in gold. I can't get a count here that accommodates this any other way. 1, 2, 1, 2, 1, 2, 3 may be in. So here's the 4. So let's think about it. If that's my 2 to my 3, I'm looking for my 4. What have we done? We've just gone right to the 50. So what's at play there? So we know an algorithm has likely kicked in there on a front run. They're looking for this right there. That would give us the 5th of the 3rd, potentially now of the, well, let's see. Do we finish that? Nope, that would have to keep going down. So that would have to be, so let's take this up a degree so I don't lose place of where I am. Let's go up to minuet. Okay, so coming down here, 1, 2, I'm not done until I get the 5th here of this. So that, all this coming down here. Ah, shit. That could be something like that. All right, so we look at it here. So in white, 1, 2, we're looking for 3 way down here because I've got to get an impulsive structure in that 3rd, and I can't get it. I keep going 1, 2. So if this is right, so all of this is based on the assumption that I have a good pivot up here. Right, this is my X wave. So I finished here with a diagonal. I finished with 5. Right, then I go 1, 2, 3, 4, 5. All right, again, can't ignore it. So that's high probability I've got a 1 wave going in. All right, here's my shallow 2. Can't be the 3rd. Again, it has to be a 1. Shallow 2 again. Then I come down. Can't be a 3rd. It's too short. Shallow 2 again. So I've done it 3 times in a row. 1. Here's just barely making, not even to the 38, just barely to the 38, barely to the 38, and we're still going. Now, we're getting a bump today. So a little bit of a bump. So potentially all that's happening here is the retrace into the 4. Now this, remember, we're in an impulse here. So in the 1, 2, this cannot overlap that 1, or the count is off. As long as we hold this 1, this plays as my 4, despite the fact that we're up today, right? We know here, so if that's my 2. All right, so we could go all the way to the 618. We could go golden zone here and still not take out the 1 pivot. So that's a candidate here for this. Now we don't know. So right now the 50 is held. So we've got a candidate here for a 4. You prefer the 4 at the 50 rather than the 618, that because we lose the statistical significance and advantage of the higher probability of a wave 4 hitting at the 50 that rather than going to the 618, yet it certainly is possible, and it would maintain the impulsive structure. So that would push, so reasonable target down here would be the algo. So here's the algo target potentially finishing the 1, 2, 3. Now let's think about that. So if this is from the pivot here to the 1 low and we go to the 2, where does that line us up? All right, now look at this. So here we start to get good confluence. So here's what we're looking for in blue, the third wave here in blue, relative to the length of this 1, 2. Here's the highest probability zone for my wave 3, which here in blue, right, which would be right on top of the algo target if this is going to pivot here at a 4. At some point, this is going to come down, right? Likely this comes down. So we go right into the pocket where we're looking for the 3rd. So all that does is set us up for the next 4. Then we're going down for the 5, and now we're ultimately, finally finishing the wave 3 relative to this 1, 2. Well, let's measure that. Right, you got to measure them all. So we know this is a very strong candidate here as the 3rd coming down. Well, let's think about that 1. So I got to scrunch a little bit here. So if this is my 1, this is my 2, and we pull that across, well, where would that put us down here? So now we'd be down here. Now we're looking at the 2, 6, 1, 8. That's a reasonable, that's an extreme for a 4, but if we're going to finish there, so we'd be looking for something like this. So we'd be looking for A, B, C, and then 1, 2, 3, 4, 5. That would finish us. You got to double click that thing. That would finish us down here at the 2, 6, 1, 8, which would be an extreme for the 3rd, but commonly seen, right? We get an extension. So the reason that wouldn't be surprising is because of all of the 1, 2s that we had. So going to the 2, 6, 1, 8 actually makes more sense because I didn't go 1, 2, 3, 4, 5. Right? 1, 2, 1, 2, 1, 2. I'm in the 3, 4, 5. Potentially. Now, if any of these violate here, got to rethink the whole thing. But right now, no reason to assume anything other than lower prices for gold. So let's pull that all the way back out and see what that would do to our count. All right, so if we were going to come all the way down here, right? So look how this lines up. So here's that wave 4 that I'm talking about here that can't violate. So all of this could come down here, finish, give us this wave 4, finish the Z wave here. All of this has to move up. So let's see if I can show this to you now that those are all in a line. All right, so let's go back to the daily. I think I can get it to you on the daily. All right, so here's the critical pivot if this is going to hold as a 1, 2. If we're going to stay that way. So as long as this holds, right, we could be finishing the Z wave down here to just above that pivot, which would create the potential now for this to be completing here and starting a whole new bull trend going up. Now, so if you think about it, right, so as a crypto trader, someone who thinks that Bitcoin now is the preferred store of value to gold, then if you start to think your way through it, that can lead to trouble. So you're better to, in my view, right, in my experience, you're better to let the price dictate rather than to try and think through, well, let's see, if interest rates are going up and now Bitcoin is the preferred store of value, then likely gold is not going to is not going up to challenge these old highs because Bitcoin will be on its way to challenge its old highs. Maybe they both go, right? Considering, God, no, again, not to get onto a fundamental rant, but considering our debt, some of the geopolitical risks, what's going on in Washington, a rally in gold, not out of the picture. All right, you can think your way through how that could rally pretty easily. So let price dictate. Price is truth. What you think is irrelevant, right? Well, I shouldn't say it that way. It's not that I'm telling you not to think. I'm just telling you let price influence your thinking just as much as whatever you're analyzing with regards to fundamental or geopolitical currency trends, interest rate trends. Price is truth, right? So work from that point backwards. You want to put in some of your fundamental views on where the dollar's going, on where gold's going, on where Bitcoin's going. There are a lot of ways that we can hyper-analyze that. You can turn on Bloomberg or CNBC any day, and you can hear 12 people tell you 12 different things about where the market's going and why it's going there. And usually they're wrong. So with all of that said, that's a very God, I went 30 minutes. That's a very detailed look at gold. But I thought there was so much good information in here that it was worth going through that process. So again, working from the 3-day all the way down to the, well, I guess we went down to the 60-minute. That's the value of working through that entire process, so you know what is ultimately now the most important pivot in the market is right here at 1031. So that's the pivot that I'm really watching for. I do think we're just setting up for another push higher, but we are not done with this move down yet, in my view. All right, guys, that's a wrap here. Want more information, you can always visit us at our website. Come to join our free Discord. If you want to learn how to analyze a market like this, you can always join us. You can find out all the details and information over on our website. That's tradedevils.com. Otherwise, give us a follow over on Twitter. We're very involved with our Twitter followers, and often we'll let you guys pick what gets analyzed as well. All right, that's it for now. See you later.